Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, March 27th, and just got a couple items here today. Note, so it'll be kind of short and sweet for you folks. We'll start off today with the Case-Shiller home prices. This is the index over 20 of the major U.S. cities in the U.S. and we're a gauge of home prices. And this is for January's numbers. Back in December, we had a negative 1.1% decline in home prices. And it looks like the decline has dropped a little bit. So that's kind of decent news that is showing some signs of stabilization in the markets. So for January, it came in at negative 0.8% from year over year. And the next item to note is consumer confidence. This is kind of an important gauge as to see where people are feeling, what people are feeling, and for this month, March. So last month in February, we had 71.6. We're figuring it would kind of be around that same gauge, around 71.5, and it dropped down to 70.2. So that wasn't obviously good. It is still above 70. The average is right around 79. But it's still off from the low back around 09 and stuff. So the good news is that we're still above 70, but unfortunately, the bad news is that we kind of went backwards a little more than they anticipated. So right now, you'll kind of see, as we'll see with the headline news, this is what's kind of affecting the stock market and stuff. And right now, the stock market's kind of mixed with kind of light trading as they kind of digest the data that was just taken out. So home prices show some stabilization, but consumer confidence kind of took a step backwards. So we'll kind of take a jump forward here to see where interest rates are at and what the bond market is. We have a pretty big opening gap, jumped up above the ceiling, as we have been kind of saying, and it's about 22 basis points, and now we're up at about another 15 basis points. As a result, now we're basically at better interest rates now. The rates are improving, as it looks like. As we mentioned, we were anticipating hopefully closing this at some point, and we could potentially be closing that with this rally. And we'll have to see if this is able to be sustained or if it's going to drop back down. So we'll kind of wait and see what happens there. We've been kind of having some mixed signals in that arena. But right now it looks like this opening gap to the worst that we had a little over a week ago, 2 weeks ago, looks like it's being closed right now. All right, folks, you guys have a wonderful day. And if you guys have some loans floating out there, I would certainly lock in, take advantage of the improvement in the interest rates right now. And we will catch you again tomorrow. Have a wonderful day. And don't forget to subscribe, get your free daily update sent to you every morning.